Good afternoon, Ian.
Hey, Paul, how are you?
I'm well. Did you enjoy your break from the IanCast last week?
Yeah, so I hope everybody enjoyed that article. If you haven't read it, definitely go take a look because it outlines kind of what Bitcoin did in 2020 and why I think it's going to do so again very soon and what the catalyst for that is. So, yeah, definitely happy to get that information out because I think that people have been kind of discouraged on stuff, and I want to provide kind of a optimistic view on stuff as usual. So yeah, go read it if you haven't yet.
Yeah, I mean, in case you don't know, we've got a free e-letter that you can subscribe to. It's called Bull Profits Daily. And on the weeks that we don't do the IanCast, Ian writes out very, very interesting, unusual, different stuff that you definitely are not reading anywhere else. Like actually, even among the crypto folks like Bankless and others, I think your viewpoint, our viewpoint is still quite unique and quite different. And last week, Ian put out some great information on Bitcoin. We're going to cover that, and we're going to cover also the future of the IanCast towards the end of this. So make sure to stay tuned. Ian, the markets are up, and you sent me a tweet that I think we should sort of peg off for the discussion about stocks. And the tweet you sent me was from someone that said, essentially, I'm going to look it up. Hey, the Federal Reserve met. They said interest rates are going to go up. I thought that rising interest rates are bad for stocks, but all that stocks have done since then is go up. And I'm not surprised. We're not surprised. But maybe just lay out the scenario for folks as to why, oftentimes markets do the opposite of what the conventional sort of thought process and wisdom is.
Yeah, so this was a typical pattern that we see in the stock market and more in the crypto market too, where everybody knows a certain thing is happening. It's either bullish or bearish for the market. If it's bearish, people will sell into the event because they think that everything's going to crash and there's way more downside than upside, at least in the short term. And then afterwards, everybody's confused because the price does the opposite of what they thought it was going to do. So that's called sell the rumor, buy the news. And the reason for that is because everybody's out, everybody sells in anticipation of something happening. This time around, it was the Fed raising rates. And by the time it happened, it had been, in my opinion, at least for growth stocks, way more than priced into these stock prices. And so since then, we've seen a lot of prices move up pretty substantially. And then another thing, getting a little bit deeper, is what's going on in the option market. So in Rapid and Rebound Profit Trader, a couple of our services, I cover what's going on in options. So I'll briefly touch on that here. But this Friday is a really big option expiration date. So there's $3.3 trillion worth of options expiring in one single day. So whenever you have a lot of money outstanding in options, there's stuff going on behind the scenes with the option dealers, the market makers, who are actually the ones providing the options to people, and they have to hedge. And when people close out their option positions to either exercise them or to sell and then buy a future option expiration date, they have to adjust those hedges accordingly. So there's been a lot of up and down movement, and a lot of that is because of the big option expiration on Friday too. So it's a combination of both, but I think that the buy the rumor, or the sell the rumor, in this case, buy the news event, was a big driver of that. And I think that growth stocks still have a long way to go up from here.
So, if essentially what happened is that the Federal Reserve announced, I think it was in September, that they said that inflation is no longer transitory in their opinion, and they are going to be on a path to raising interest rates. The market took that sort of bait and has run with it, certainly with growth stocks completely, where they've run growth stocks down as much as 80%. We've got stocks that are down 90%. And everyone is thinking that after they announce, there's going to be another 90% collapse.
Right.
And that does not happen, folks. That does not happen. Instead, the reverse is occurring. Why? That's because the market essentially has priced in all of the negatives in case that thing is going to happen. And I don't know if did you read Jerome Powell's statement that was released yesterday, or what the Federal Reserve said, more or less? Did you read that?
Yeah.
Yeah. What were your impressions?
So it was, I mean, basically the same kind of thing they've been saying where, they're gonna see what happens in the economy. They're obviously going to stop the bond buying on their balance sheet. And so that was another thing that people thought was going to be like a doomsday event, was that they were going to stop doing that. And it's bad for some areas of the market, but not growth stocks, because they weren't buying the growth stocks debt. And a lot of growth stocks don't even have debt. And it's more of the Fed is going to raise rates, but do so at a pace, in my opinion, that I'm not seeing reflected in the market. I think the market is still anticipating a lot more hikes than the Fed is willing to do this year. So I think it was kind of also a relief to the market to see that. And I think that's another reason that things have rebounded. It also obviously provided certainty to the market. The market loves certainty. So when people have a better idea of what's going on, then they're more willing to buy in and put their money back into stocks and out of cash.
Right. And when I read it, and then I looked at what is going up and what is going down, and then some of the news accompanying it, which is that the number of mortgage applications is down significantly.
Yep.
So that announcement was like a shot to be like, okay, lift rates up for all kinds of things. So housing is now weakening in a very significant, which is a very big part of the spending picture of the economy. So that's weakening. Consumer sentiment has been signaling that consumer spending is going to fall off. And now with oil prices being at whatever, $100 approximately, gasoline prices being somewhere between $3.50 and $4, that's going to take a bite out of consumption. So, and then the Federal Reserve is indicating that they are going to raise, I believe, for the next 6 meetings in a row, they're going to do that. Yeah, I have a hard time seeing them do this. And if they do this, they're going to slow companies that are already going to see so many slowdown impacts. I mean, from the perspective that the pandemic surge was temporary. So, they've got high sales comps to begin with that are not going to be replicated because we're now no longer in that place. Then they're not buying their bonds, and they were recycling bond money to, raise dividends and buy back stock. And then there's actually a weakening in consumer spending
Right.
associated, with general spending. And then the housing part of the market, which was, supported by fairly low rates, is also going to weaken. How are they going to raise rates 6 times?
Yeah, I know. I agree. It would. Yeah, I can't see it happening because, like you said, all the things that would cause on top of them not buying these companies' debt anymore. And if you look at the list of companies that the Fed has been buying debt for, it includes a bunch of older companies that were basically solely reliant on the Fed to buy their debt, like General Electric and a bunch of other companies that have just gotten crushed in the market in general. And their debt is pretty questionable on whether or not they're going to be able to pay it back. And so it generates higher rates and things like that. But yeah, it's definitely very interesting to see this all unfold, because I think that later on, when they're not able to raise that much, and the market was pricing in even more, I think the market's pricing in still an additional 7 or so rate hikes for 2022. It's going to be even more fuel for growth stocks because people are going to be more willing to buy things they see as risky, and as a result, more money is going to flow into growth and out of these companies that are going to run into trouble because, like you said, they take out debt to service their dividends and share buybacks. And those two things are a big deal for getting people to buy their stock. They're really big incentives to do that. And so if they're not able to take out as much debt and have the Fed fund that, they're not going to be able to finance those dividends and share repurchases anymore. So that's going to make those stocks more unfavorable. And I think that's going to work in growth's advantage too.
Yeah, I mean, if they go ahead, and they could, I mean, if they squeeze quarter at a time, and consumer spending does not fall off, if the oil price goes back down, it actually is a great scenario for us. Every rate increase that slows the economy down lifts the value of any company that is growing.
Yeah.
because they now become more and more scarce, like unicorns. And its price will go higher and higher as people say, well, that company's, it's negative 3% growth and they're struggling. They're not going to increase dividends, can't buy back stock. But whoa, here is this company that's doing 15, 20, 30%. So the scenario is actually very good. For our stocks, if they slow the economy down, that's great. I mean, for us, if they end up slowing the number of interest rates, well, like you said, that's going to push money into the market. And again, they will favor more speculative, more risky, and higher growth stock. That's also in our favor. I don't know. Everything's lining up actually pretty perfectly for us.
Yeah, especially after these stocks have taken such a big hit.
Yes.
They've got a lot to make up for. And I think that more like this year, even we could see some of these potentially make new highs that, I mean, they're down 70, 80%, but I mean, we've seen crazier things happen. So if not this year, then soon after, I think that we're going to start to see some growth stocks go even higher than they were before this crash.
Yeah, I've been telling in our updates, which I've been doing over the last 2 weeks for every one of our services, that reminds me actually truthfully a little bit of 2009. And I truthfully started buying stocks too early in 2008. I think I started in September, October, and like truthfully by the end of 2008, every single stock that I had bought was down like 70, 80%. And I have to say, it's one of the greater miracles in my life that like those stocks obviously went back up. And then like, I just sometimes would look at my brokerage account from time to time. It's like, I cannot believe that stock, which was down 80, 90%, is now up 300 or 400% from that level. And where, they just kept going and going. And I sense, my feeling is that we're in a similar market for our stocks, which is our people are going to rub their eyes in disbelief in, I don't know, 6, 9, 12, 18 months, be like, I cannot believe it went from there to there. That is just like beyond people's thought process right now. Right now, everybody's unhappy and annoyed and irritated. We get that. Nonetheless, things are definitely, I forget setting up. They are now like unfolding in our favor.
Yeah. And, just as an example on how much these big companies are in trouble if they do raise rates this much, and just even from the bond thing. So I'll use Procter & Gamble as an example. They are really reliant on taking out debt to pay their dividends, to buy stock back. And they have a lot of debt due this year, first of all. And if they were to pay all of that and pay their expected dividend for the year and also repurchase as many shares as they did last year, they would eat up their entire cash flow for this year, all of their current cash that they have in their on their balance sheet, and also need an additional $6 billion. And that's not that unique of a situation from these older companies. And it's kind of surreal to see. And it's going to be kind of crazy to watch this unfold, because I don't know how these companies are going to make it work if the Fed raises rates. So I think the Fed will see that in advance, and they won't want to crash the market and drive these companies basically bankrupt. And I think that, they're going to take it way slower than expected.
All right. So I was on my phone rapidly trying to find this piece of information, which to our team, hey, it's in the general channel, and post it up just for a second or two when I talk about this. All right, Ian, since this might be one of the last few times I get to do this, quiz time again. If you were to guess, right, over the last 10 years, based on the end of Q3, which is the last numbers that I have for the S&P 500, how much money has been spent over the last 10 years in stock buybacks?
That's got to be, I would say trillions. I'll say $4 trillion.
$5.81 trillion over the last 10 years in stock buybacks. 5.81 trillion.
That's a lot of wasted cash, in my opinion.
But going to what you're saying, where are these companies going to find in the next 10 years another $5.8 trillion to support their stocks?
Yeah, exactly.
Not going to make it.
Yep.
Not going to make it. Yeah. I mean, So, I mean, we were talking about this, which is that there's expectations that this is like a great bottom to buy the S&P 500 or the Dow, and I'm going to disagree. What about you?
I would disagree too. Even if it doesn't go like a ton lower, that I don't think it's going to make new highs anytime soon. Whereas I think we're going to see growth way outperform over the coming years. And yeah, I would say that this isn't a great dip to buy long term for the big indexes or the bigger like mega cap blue chip stocks that make them up.
Yeah, I'm going to 100% agree with that and think that you are going to, in the S&P 500, most likely in the NASDAQ 100 as well, that is dominated by six companies, you're going to see a very frustrating range trade for many years to come while our stocks keep making new highs. And over time, and I mean like time, I believe 3-5 years minimum, you will see our stocks eventually get so big that they will start to supplant the big names in the S&P 500 and the NASDAQ, where now the base is set for them to start to make new highs. But I would say minimum 3 years before the Apples of the world and others sort of get right-sized relative to the big growth opportunity companies that we own, and where like now these companies can start to really, push these indices higher. But I'd say minimum 3 years. What do you think of
Yeah,
that scenario?
I could totally see that playing out.
Yeah, I mean, because Apple's still 6% of the S&P 500,
Yeah.
6%. And and then those other six companies are all like 4 or 5%. So these things which everybody thinks are a sure thing, and they've been buying those stocks which have been supported. Anyway, this is what we believe. We are crazy BOP right now on our stocks. We've gone through, I don't know, this has been by far like the most painful correction that we have sat through. I mean, this was worse than 2018, definitely worse than 2019. 2020 was bad, but that V recovery made it like definitely worthwhile. This has just gone on and on and on.
Yeah.
Yeah.
It's crazy. People were treating it like the dot-com bubble, and it's nothing like that. It's
Well, I mean, the stocks behaved like that.
no, yeah, they did, but yeah, the fundamentals are there. Whereas in the dot-com bubble, it was all like these random things that were being pumped up, and not a lot of them survived. In this case, the companies aren't in financial trouble. They have a lot of cash. They don't have much debt. They aren't wasting cash on dividends and share repurchases. Instead, they're putting the cash back in to grow the business. And that growth is going to become really scarce and get a lot of value, I think, going forward.
As somebody that was actually around in the 1999 bubble and then the 2000 crash, I have to say the scenarios are actually exactly inverted, which is that the growth companies today are in the position that value companies were actually in 1999 and 2000. Value companies at that time, which were banks, et cetera, had a ton of cash. At that point, they weren't buying back a lot of stock. They were cheap. Growth stocks, which we know were the dot-com stocks, were trading at these crazy multiples. Everything's inverted. Clorox today trades at 64 times PE.
Yeah.
Does not have enough cash for its dividends and buybacks, or to really handle even a fairly small problem that should show up, which is why their stocks are in waterfall decline. Meanwhile, our stocks are cheap. They got cash. They got growth. It's setting up to be very, very, very good. I am so stoked. Actually, now that the Federal Reserve has said what they're going to do, we've seen what the market reaction is, which is like a poker hand. Like now everybody's shown their hand as to how they're going to play. And it's very clear. I mean, our hand is the winning hand. It's 100% clear.
Yeah. And there's a lot of cash on the sidelines too. And at this point, I doubt many people own growth stocks, although we have seen money flowing in behind the scenes into ARKK. So that's a good sign. But for the most part, people are out of these. And so that money is going to come back in and fuel this rally for a while to come.
Yeah. I mean, we are very, very BOP. Hopefully you held on. If you did, we believe good times are coming. So be strong hands, be BOP. What about for crypto, which also has been acting like growth stocks?
Yeah. So Bitcoin has been, kind of trading like growth stocks in a way. It was seen as bearish that the Fed was going to hike rates for Bitcoin. And actually, if you look at a chart of Bitcoin and the 10-year interest rate, they kind of make the same kind of moves at the same time. So Bitcoin did really well in 2016 and 2017 when the Fed was hiking rates. So, I mean, even if we don't see all those rate hikes, which I don't think we will, I think Bitcoin is in for quite a rally in the coming months, just because of the scarcity of it, first of all. So Bitcoin, I think 63% of it has been held for a year and not moved. So people are hodling, long-term holding, they don't want to sell. And usually those kind of people that are putting it away in cold storage or something like that and not moving it for a year or more aren't going to sell until Bitcoin goes parabolic, and then they might take some profits along the way. So it's only getting more and more scarce. And as we have seen geopolitically, there's never been a better advertisement for Bitcoin as a reserve asset, because you have full custody over it. If you have private keys and everything like that, it can't be sanctioned, it can't be frozen or anything like that. So based on both on a geopolitical level and an individual level, I think Bitcoin has never been seen as more attractive, and it's not reflected in the price yet, because we've got to see that initial move up first, and then after that we're going to see demand at higher prices, which is exactly what took us from 10K in, I think, like October 2020 or a little before that, all the way up to over 60K within a 5.5 month range or something. So I think that bigger gains are on the way. We just got to see that initial spark first, and I don't think we're too far off from that.
Yeah, one also unthought of thing, which is that Fed raising interest rates, while it's problematic for obviously these America 1.0, these stagnant secular decline companies, it's also a big problem for, countries that essentially use the dollar as their currency.
Yeah.
Us lifting rates is a significant problem for them. And they may want to get off, and move to something else. And El Salvador has done it. I'm thinking, if people go through and read the Federal Reserve statement, they're like, whoa, if they actually do this, all of our companies that have borrowed in dollars, where are we going to get the money to pay this off from when the bond market says we are not going to roll your debt over?
Yeah, exactly. That's definitely a tough situation. And a lot of the company, or a lot of smaller countries, do rely on the dollar. So, and then you've got a lot of countries with much smaller currencies that have high inflation. And I think Bitcoin, with El Salvador, that was the first domino. And I think each one from now on is going to be a lot quicker. And I think that we still could see at least 2 or 3 countries make that change from their currency into Bitcoin this year.
Yeah, I'm telling you, you want to know the next country that's going to do it? Go look how much dollar debt they have. That's the next country. And we're like, let's go to Bitcoin now before the problems show up, because we now have an exit path out. There. So, it's definitely it's been a very, very painful 6 months. It was September, more or less, when they announced that they were going to, look to raise rates. Now, the plan has been laid out, the uncertainty. Really, it's kind of like, to me, they've laid out the worst case scenario. Mm-hmm. And the worst case scenario is actually great for us, and it's great for crypto.
Yeah. And the best thing is that even if it doesn't play out, it still will work in our favor.
Yeah, 100%. All right. Let's talk. We haven't talked some of the things that we usually talk about, which is Tesla and cannabis.
Yeah.
Now, Tesla never really dropped as low as many of our other stocks, like Zoom, which just got destroyed now 80%. I got many others. Teslas, are setting up for where their demand is off, is crazy. They've got Giga Berlin, which is now producing, Giga Austin's producing, Giga Shanghai is producing. They could use to put up 3 more plants, and they'll probably still be pretty close to being sold out. And then I was laying out to Amber, which is that once robo-taxis, which is, I just got my new car, by the way, and it's got full self-driving. I have to qualify for it. But once full self-driving becomes a thing, and robo-taxis become something that people can be hey, this can actually happen. This is not some science fiction. The amount of volume of people that are going to want cars to run them as robo-taxis is just
Yeah.
going to be insane.
Exactly, because you would just literally be able to be at home and have your car go out and drive people around and you would get paid for it. So it's like, it's actually a useful asset at that point. It's not just sitting in your driveway all day. It can actually be like a side job to make you money.
Right. In the comparison, I think Kathy Wood and Arc Innovation did this. And they said that a robotaxi would be able to transport a person at about 25 cents per mile, which is not, which is competitive with public transportation. And it's obviously like, like 80% cheaper than a car or anything else that's out there. At 25 cents a mile, for example, I'm planning to drive to Florida to meet with our team. It's about 800 miles. So that would be a $200 ride.
Right.
From North Carolina to Florida would be $200. That's crazy cheap.
Yeah.
Who's going to compete with that? An airline can't compete with that.
No.
Really, Amtrak, forget about it. I mean, no way. I mean, a regular passenger car, no. When you consider the cost of the car, the gas, everything else, no. I mean, this is like, it's going to wipe out a whole bunch of other stuff.
Yeah, I mean, plus the whole self-driving feature is really convenient because then you can be doing whatever. You have to pay attention on driving. You can sleep, you can do whatever. So that's another added benefit of these self-driving cars. And I think that that's going to be a factor in people choosing to take that route too.
Yeah, I mean, and for Tesla stock, that's why I bring it up, is that once something starts to become more certain, stock market investors start to price that into the stock because like, oh, we can see 3 years out, this revenue, which was speculative, is no longer as speculative. It's going to happen, and you'll start to anticipate that. And that's how stock markets work. And if we're right, and I'd say 3 years, 3 to 5 years, robotaxis are going to go from like where we're about to enter the slowly period. And then I think 3 years is when you enter the suddenly period, like EVs for until 2020 was the slowly period. Now we're in the hockey stick curve.
Yeah.
So the slowly period is usually where stock market investors start to actually price the big opportunity, which would tell me that Tesla is about to explode higher.
Yeah. And, despite the weakness in the indices, because that's a big part of the S&P and the NASDAQ now too, I think that that's probably going to be the biggest market cap in the market before long, because the ones ahead of it don't have nearly the growth ahead or the strength or the demand for their products as well as their stock like Tesla does. So that'll be interesting to see, but I wonder when that's going to flip the rest of the companies and be the biggest market cap in the market too.
Well, Apple's 2.5 trillion and Tesla today is about 850 billion. Do you guess as to when this was going to happen? I'll guess too, but let's hear yours first.
I would say probably in the next, I would say maybe 2 years. It could happen.
I would agree with that. So we're in 2022. I would say by the end of 2024, Tesla is the largest market capitalization company in the S&P 500. So it would be something in excess of $2 trillion. So that would be more than double from current prices.
Super doable. Yeah.
Yeah, I 100% agree. Moving on from Tesla, cannabis. I mean, I know you keep pretty close track of it. I keep track of it as well, but you keep closer track of it. These stocks have bottomed with growth. I mean, I can see the action in Canopy growth, in MJ. It does look like there's very significant short covering going on. There are definitely people that made money on the short and they're coming in to cover. But these stocks also still have growth and have cash. They have the same identical growth profile as growth stocks.
Yeah, a few of them like Canopy, Kronos, and maybe a couple others have like billions of dollars in the bank. And I think last time I looked, a couple of these stocks, their market cap was like barely more than their cash balance. And these aren't like heavily in debt companies either. They don't have a ton of debt to pay off. So they have cash. There's been some acquisitions over the past year or so that have been big, and legalization isn't slowing. I think it's going to be on a few states, at least a few ballots in November. So that's something else to watch. And as these companies continue to expand into the US and also grow through acquisitions, I think that, the valuations at this point are so low, it's crazy. And we've got a long way to go from here. I think every single month, at least maybe for MJ, but I think for CGC, they've had like a string of at least like 10 months where the stock has been down every month. It's been ridiculous compared to what the potential for these companies is, and the amount of cash that they have, the insignificant amount of debt they have, and the growth prospect ahead of them. It makes zero sense right now.
Yeah, I mean, anytime I've seen, like you've said, 10 months in a row, there's been an equal and opposite reaction to the other side, which is why those of you that are subscribers to Rebound Profit Trader would have seen that we have we done that trade? Did we do? We did. Yep. Yeah. So we put out that trade today for Canopy Growth, and you can expect to see more of that because I'm expecting significant short covering. And from my experience, that can last actually 3 to 6 months because it's hard to get stock. And the shorts, every time they are exposed to a high price, will back off from covering the short. And then the prices get lifted even higher by the market makers, and we ain't selling. And we own some of these stocks, and we are not selling. And we, if anything, will add on to that buying pressure by actually adding more of these stocks to some of our services. We used to own Canopy Growth and Profits Unlimited, and we might add back sometime in the near future.
Yeah, I mean, at this point, if you've got like a mid or even long-term time frame, like these prices are, I think, going to be seen as like a joke a couple years out. So yeah,
historic. Yeah, we are BOP on Cannabis. Been a brutal, ugly ride, but sometimes on the other side of that is incredible beauty. And so I am very, very, very BOP on Cannabis. And we held it in all of our other services, Cannabis stocks. We left them alone. We could see some big, mega winners here, folks. So very BOP on Cannabis. All right. We covered Bitcoin. So instead of covering Bitcoin again, let's talk about what your plans are for the IanCast. I was telling Tamara, our incredible publisher, business manager, that, we've been doing the IanCast in this way for a while. And what happens inevitably when you do something in the same way for a while, people get bored, it gets stale. And so Ian has some incredible, exciting plans to take the IanCast. So tell folks a little bit, don't give it all away yet, just a little bit of a tease. And then, in the next coming weeks, as you plan and prepare and get set to launch this phenomenal, new version, just give a peek into your ideas and what you're thinking.
Yeah. So really where I want to go with it is making the IanCast more focused on crypto for one thing, bringing in things that I haven't talked about yet that go kind of deeper into the market and what I'm seeing and things like that. But I've sensed that a lot of people are interested in hearing more about crypto, things like altcoins, and just more giving a deeper dive into that. So I'm going to be focusing more on crypto going forward. It's just going to be me. So that's another thing. And Paul, I will definitely have you on from time to time. I'll have other people from our team on as guests for sure, just to get up everybody else's perspective and talk about the market and just, kind of wing it, like kind of what we do on the current IanCast. But yeah, so going forward, going to be focused more on crypto, altcoins, things like that. And just to give a weekly view of what I'm seeing in the market, bring up any news I see, and just really anything that I find interesting and that I think everybody else will find interesting too.
Well, I'm going to throw out some requests based on email and stuff that I get through Profits Unlimited, which is that if you can talk about staking, what it is, what those opportunities are. And then we've talked a little bit about the notion of DeFi blues and, and the value that's embedded in these coins. And Kathy Wood and Arc Innovation have talked about, the new world of decentralized finance and what that actually means. So those are 3 things that I would tell you, I think our subscribers, if you can just lay it out again on a simple basis and then build up from there. I mean, folks would love the education, love the information and engagement is in there. And then I would say you also got to cover Doge.
Yeah, for sure.
You got to cover Doge.
Yeah.
You got to promise you're going to cover Doge. Otherwise, you have to barge in and be like, Ian, I'm coming on. I'm covering Doge.
Yeah. I think they're isn't Elon launching like a Dogecoin rocket or something to the moon? I haven't been keeping tabs on that, but I remember that vaguely.
Yeah. So that's my rule. You got to cover Doge.
Yeah.
And periodically, whether you want me or not, I'm going to barge in and be like, hey, Ian, I'm coming on. And then the other upside is that we have a phenomenal team, folks. I mean, these folks, Ian talked about winging it, but like for us, winging it means that we read 12, 14 hours every day about every single stock, every part of the market. I mean, you can tell. Look at our IanCast and how much information we put out crypto. So that's the level of preparation that you always get. And, the IanCast is going to get better. It's going to be awesome. It's going to be phenomenal. So make sure to subscribe to Bull Profits Daily, where Ian's going to lay out his vision for where he's going to take it. And then let people know your inaugural IanCast in the new way. So everybody make sure to tune in. I will definitely be tuning in. So make sure you let everybody know. All right.
Yeah, will do. And also, if you'd like to, check out my Twitter at Ian Dyer Guru and comment on anything I post, ask questions, and I will take a look at those, and I might answer some of those in IanCast going forward too. So definitely check it out, give me a follow, and leave some comments, questions, and I will get to those too.
Sounds pretty good. All right, Ian, you say goodbye first, and I will wave folks goodbye from the IanCast for the very last time.
It won't be the last, but thank you everybody for watching. Happy Friday. Have a great weekend, and I will see you again on the new and revised IanCast next week.
All right, folks, it's going to be great. It's going to be awesome. I will come on, barge in, make sure that Ian's covering Doge, very importantly, and then all the other things. And then, I, of course, cover all of our stocks, all of our crypto on Tuesday. Also, if you're a subscriber, I'm on the update, so I'm not going anywhere. I'm still here. And Ian and I, of course, we are always texting through the night, so you will get some of me through him one way or the other. Yeah. With that, Ian's going to take it away. Next time you have the IanCast. Ian, I know you're going to do an awesome job. And folks, make sure to tune in. And with that, I'm going to say bye and come back for the new IanCast next time. Until then, this is Paul saying bye.